Hey everybody, Mike Fairbourn sitting in for James Boyd today, who's out, but expect James to be back next week for sure. But hey, folks, I want to take a look today at the S&P 500, scanning the S&P 500 for growth at a reasonable price, but really looking into more details into that growth side. What's going on behind the scenes with the company? Is the company itself, with what the company has, is it growing? How about its earnings growth over a period of time, as well as sales revenue? There's a lot that comes in if you look at those three components there in identifying a company for strength going forward. So look forward to doing that as we scan through the S&P 500 using some scan tools, some search tools to help us out there. But it is good to be with you all today. I'd love to teach the fundamental classes. I started off with fundamentals initially as an accountant, and then moved on into some technicals. Love combining the two together. We're going to be doing that today as well. We're going to combine both sides, and I look forward to going through that with you all. All right, I'm joined in the chat by a good friend of mine and colleague, Connie Hill. You see in the chat as CH. You could join us both on X, Connie Hill CS, Mike Fairbourn CS. Love to have you guys there with us. Okay, well, let's do this. Welcome to all of you. A lot of familiar names. Great to be here with you, folks. Let's keep the energy up, and let's get started here. All right, information here is for general information purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Paper money software application used for education purposes only as well. Investing in stocks does involve the loss of principal, investing in stocks involves loss, including loss of principal. Past performance is no guarantee of future results, and there's no guarantee that the execution of a stop order will be at or near the stop price. With that, let's dive on into things right now with the S&P 500. Just a quick, brief, big picture overview, always quite helpful in looking at markets. There it goes. I was wondering if my lines would add in that would show up, and they do. It took them a second, though, to dive in. And what I've done here is I've just extended my lines on our ascending triangle to the upside. We had one over here as well. We broke to the upside. These normally will break in the direction of the trend. We're getting some fairly interesting, I'd have to say, seasonal characteristics this time of year. We tend to see a lot of strength in the markets, and we might be getting that again as well. I'm going to zoom on into this so you can really see it. Let's clear those guys out, and I'll kind of show you a few different items. So that is right there, the apex of the triangle. We've identified it where those two lines cross. Sometimes, not every time, you might start to see a move occur there, even if you break out ahead of time. This is crazy because what have we done? We've come almost all the way back into our triangle. It wants to get there pretty bad. I will say this. What is unique about this move right now is the fact that we did take out right there the prior closing highs today. Now, did we close above it yet? No, we didn't. We came close. Yesterday, we might have slightly done so. We traded higher today. Just curious to see what we get. We're still up a little bit here, about 4. All else equal, you know what? You start breaking the trends here. A lot of technicians will say, I'll tell you what, there's been a long-term trend coming up here too. If you start breaking highs, you guys tell me. If you're breaking highs and you're getting higher lows and higher highs and higher lows, by the very definition, higher highs and higher lows means trend up. That is the trend to the upside, and this could continue on up, as we could see right over here. Now, seasonally speaking, you guys have maybe seen me do this in some of my classes, but just go under style real quick, super quick. Seasonality here. I'm going to take us right to a percentage comparison just so we can see this a little bit better. We'll look at a 5-year and a 10-year fast. But yeah, we tend to get that move up through February. We've popped back into kind of a seasonal move right here. So seasonality on average, this is average price movement, 5 years, 10 years, 20 years, looks very, very similar. In fact, I'll just even bump it up real quick to a 10 to just show you guys. There's your 10. If we take out, though, the tariffs of last year announcement, which was a rare announcement. I mean, that doesn't happen very often, right? Global type tariff renegotiations. Tariffs, we had tariffs. We also had COVID, the COVID. That all happened right there, and that changed it. But normally, If you knock out those two, you normally mid-March is where you get a move. But hey, it's going to account for big moves. Tariffs and COVID was a big move, but yeah, sometimes you run to mid-March. Sometimes the first 3 months of the year tend to be fairly strong. We'll see what happens. But that is your 10-year. 20-year looks very similar as well. Okay, back to a regular chart here. We'll just take a look at this. SPX. Okay, so that's just a general feel. We like to get that sense of where the markets are. Is it sort of a risk on versus risk off right now? Maybe more, more interest in investing as prices are going higher. Not too much more to say there. Just a quick glance though at the NDX, because I wanted to state that it too had a move above a higher range. And by the way, it had much more of a symmetrical triangle over here, as you guys could see, right? It wasn't so much sloping to the upside as much as it was going sideways. And interestingly, it too had a break lower, just like the S&P 500, but showing strength. And this is where we've seen leadership in the S&P 500. So just real big picture, broadly speaking, that's kind of a fascinating component of it. I have this listed over here as the Magnificent Seven, and that's a look at your Magnificent Seven right there. Now, this is not an ETF, although there is one out there, but I have, in a sense, created that myself because it tends to lead the markets. It has these big tech players because, folks, they make such a they make up such a huge component of the NASDAQ 100. Well, I mean, even the S&P 500, market weighted, right? Look at the size of these blocks. Yeah, I'm seeing a lot of Magnificent Seven right there. But if you just put the plus sign between those quotes right there, across the board, there you have it. It lines up and you've got it. So now what you've got is really just a view of what might be leading the NASDAQ 100, which could be leading the what? The S&P 500. It has been previously. We don't know if it'll continue, but that's where we're seeing the strength. By the way, it's not broken up yet. We have some laggards in here, but if this one starts to move up or down, watch that NASDAQ for strength or weakness as well, is what some traders would look at. Okay. That's a long symbol, by the way. So it's better to just save that one instead of typing it up every single time, right? Oh, yeah, I can share it for sure. Let me just do this. I haven't done this. Let me see. I'll just go over here. Oh, is it going to let me? It's not going to let me share it, is it? There it goes. Let me try this. I'm going to give it a shot so you guys don't have to type it all in. There we go. Okay, just right click or just Control C. Let's see if it works. There you go. Yes, it is going to work. So you just want to copy this and plug it in. It is not a think script. It's simply just a set of symbols with them all in there. Somebody I was watching tried to substitute out AVGO for Tesla. They didn't like Tesla, but I think Tesla is, just as a quick note, where is Tesla? All right, well, let's see. Tesla's right over here because it is part of the Mag 7. And Tesla it's been sideways for a little bit, but there you go. Earnings expectations. Oh, after the market today. Today. Yeah, okay. All right, everybody. Well, I want to talk about a few different components today as we break into a specific discussion. And I wanted to look at the companies over here. I'm going to be using, actually, I'm on demo account for Schwab.com, and we're going to be going right into research here. We want to talk specifically about growth. Growth is such a key component of finding companies that might be performing in the future better. Now, just a quick idea. I'm going to go back to the S&P because we're going to start incorporating fundamentals right now. If we look at a long-term chart of the S&P, and I'm talking fairly long. In fact, I'm going to go over here. I'm going to go into my daily, weekly, monthly set over here. And I'm going to go ahead and go into SPX. And we'll go into a monthly right there. Now, that's a 20-year monthly chart. Now, when we're talking about earnings and earning strength, there are a few different things that traders would look at specifically when we're looking at earnings. And I know JB, because I've done chat for him in this class and a few different times, but he might just use like just a blank doc just to kind of look at this and go through some details here. But we're talking about earnings growth. And this is a really super key component that I don't think a lot of even fundamentalists that are using some, well, I should say using fundamentals or technicals would dive into this much detail. But once you understand the concept of it, it's really easy to line up on a Schwab screener, for example. So let's talk about it. So earnings. There are a couple of different ways that companies can build earnings, and there's one that we're most clearly interested in. But one way is to cut costs. Okay, we can cut costs to generate an earnings growth. Okay, to increase earnings. One way, yeah, no doubt. Cutting costs. Obviously, if you cut costs, you can increase your earnings, because big picture, really what we're looking at, if we just narrow down real quickly an income statement. So the income statement itself, right? The performance statement, also known as the performance statement, income statement. We're talking about what's up at the very top of the list. Well, it's going to be revenues or sales. Just type in revenue. So we've got revenues, okay? And then with those revenues, go no spacing here. We're going to subtract out any costs or expenses. Okay, so we'll do that right there. And so we obviously revenues are up minus expenses. And then what do we have after that? This is just really, really broadly speaking, but that's going to give us at the bottom here, that's going to be our earnings. And because we're looking at public companies, it's earnings per share. There are shares in public companies, and there you go. Some private companies have shares as well. But you can see right there, if we were to reduce our costs, our expenses here, what happens? Well, earnings could go up. But eventually, if we start cutting off a number of expenses, and by the way, some of those expenses could be, employee salaries, running business operations, what's going to happen eventually over time? It's going to impact earnings. So that's not really a way to continue earnings into the future. It'll work for a period of time, and you can cut costs to improve earnings, but it wouldn't be like the key goal. If we're over here looking and say, for example, at the S&P 500, and we're looking for a bag of a mix of companies over 500 companies that are performing fundamentally over periods of time, you're not going to get a lift like this if they're not growing, right? You can't just cut costs and expect this to go on forever. Absolutely not. So what we're going to do, and let me just go ahead and just do one thing here, folks, just to mute that. And there we go. So the next way is to increase revenues. Now, it's not to say that we can't cut costs at the same time, but to increase those revenues would be a way to help earnings to continue to grow in the future, right? It's something that's going to be kind of extensive and going future-based, right? Over long periods of time, that continuation of earnings. So that's a key point, because if we come over here and we start looking now at our screener here, and let's just dive into make a couple of different details on the screener right now as we dive into it. But first things first, let's go right into the index here. So I'm just under the basics. By the way, just a quick note. Yeah, I'm under research up top. If I click on research, again, I'll just show everybody. Go to stocks, stock screener right here, because we have some very cool tools to help us in this regard. But yeah, first things first, we're looking at the S&P 500. So I'm going to plug these in here momentarily, but let's go ahead and start right now. So over here, S&P 500. Next thing I want to do is I'm going to go right into company performance. Okay. And I want to be looking at revenue growth history over the last 3 years. 3 years. And I'm going to say a very commonly one used that's used for growth. We're looking at growth and like kind of stronger growth. Okay, I'm going to go ahead and just click on this enter specific criteria up top. And I'm going to say greater than or equal to, and it's going to be 15. That's commonly used by analysts. 15, they like to see a 15 growth number right there, okay? So very straightforward. We just knocked down the S&P 500 a lot. There was 503 companies. Now we're down to 85. Keep that in mind. We're centering on growth, and we're really looking for strength over here. Okay, so some key strength areas. Now, that's to increase earnings. We're using that revenue, and very straightforward, but it's history. And if there's a past history, at least 3 years, well, that can give us a sense that they've been able to do it going forward. They might be able to continue to do so going forward. Remember, they are S&P 500 companies. They've met criteria to be on that list. They have, they're all going to have a history. To be on the S&P 500, you're going to have some history of revenues and earnings. All right. Now, it might be, some of those might be going down right now, but many of them could be, going up. And that's what we're trying to identify right now. All right. Let's see. I'm just making sure we're all on the same page right now. All right. Looks good. Okay. So we want to talk more about earnings as well. We want to see if we can identify a history of the company's earnings. But before we even go into that, I do want to do an earnings over a period of time. And we want to look at earnings growth, the history of earnings growth. But you know what's fascinating too? Is how does that company continue that growth internally? And what does the internal growth of the company look like? In other words, if we're over here looking at the S&P 500 again as a reference point, and we're talking about return on numbers, a big return on number, and this is one that Warren Buffett uses too, ROE, return on equity. Folks, got to be honest with you, this is what's going on behind the scenes with the company. What is the return on what the company already owns? This is such a key point. It's not revenue from sales that they're trying to bring in. We already tried to knock that portion out right now. We want to see if we can generate more revenue from the company and increase earnings into the future. But what is the company able to do right now, even if that revenue slowed just a little bit? How are they doing with what they already own? This is ownership right here. Equity is ownership. Okay? What they own and the return on. And so what we're looking at is net income, return on equity, net income to equity, right? What are they able to do with their own equity right now? What does that return look like? All right. So a return on that is going to be, if we were looking at the S&P 500, think about it this way, you guys. Here are a basket of companies over here. If this company, just fundamentally speaking, is making 15% a year on the underlying itself, the fundamentals, over and over and over, if it has that kind of strength, you could see actually a pretty strong trend. Now, the S&P 500 collectively is between 10 and 15, but this is what these companies are able to do behind the scenes. And I think it's a real key driver to what you're seeing long-term on the charts. It can clearly play a role. Now, this is a big one for, you've heard of his name before, Warren Buffett. Buffett will say, hey, I want a 15 ROE. Now, I've seen him go as low as 12, but I've never seen him, at least when he was buying his own stocks, I've never seen him go below that 12 ever, as low as 12. So think about it in terms of fundamentals and stock prices as well. There's not a perfect correlation between the two, but all I'm saying is if you're expecting a 12% return, which is what a lot of individuals will look at on the year, let's say 8 to 12 is like kind of a historical average of the S&P 500, for example, 8 to 12% return. Now start to correlate that to what the company itself is actually doing behind the scenes. Are they generating that kind of growth, right, on their equity, what they already own? It's a fascinating concept, but 12 to 15 range is what we're looking at. By the way, when we run through our search here, we're looking at 15+%. So now start thinking about drivers for stock prices potentially with higher revenues, higher earnings, return on equity, what they own already, those earnings that they've already gained. We've added in sales, so that's on top of it. Now we're saying, what are they making? So let's do this now. Let's go ahead and dive on into return on equity right now. And we'll set this guy up. Here we go. There's my bright screen again. It's all white. All right. So let's do this. I'm going to go over here and we're going to go down into this area under financial strength specifically. And there you go. Return on equity. It's trailing 12 months. What we're going to use on that, we're going to use the minimum that Warren Buffett is using. By the way, we can use any number we've got, but I'm going to go ahead and just say greater than or equal to 12. Some more on this in just a second. We can see a history of that performance too, which I think is really, really important. We have that history actually on the Thinkorswim platform, and I'll pull it up momentarily. But now we've knocked it down even more. So we've said, yeah, there's sales growth, revenue growth, 85. Boom. We cut it down substantially. We almost cut it down, in half again by saying return on equity. Now we're saying, are they delivering those earnings? We're still not done, though. We can dive in even deeper here. And let's go back to our little list here we've got. And let's see, there it is. No, I'm sorry, guys. It's right over here. Oh, 1 second. Sorry. There we go. Okay. So we had return on equity. What earnings is the company generating internally? Okay. We're choosing that ROE, and we're saying greater than or equal to, about 12. 12 or higher. All right, so we've got that in place. Now, the next thing we want to do is just actually look at a historical earnings growth. Okay, and with that too, we're going to just simply use what we talked about up top for revenues. In this case, though, we're going to look at that 15+%. Key point. Are we satisfied with 15 only? Heck no. Let it grow higher. If it's growing faster, let's see it. But collectively, if we take this, sales up on top, internal revenue growth, and historical earnings growth, okay, collectively, it can definitely create more of a comprehensive view of what the company's actually doing. And again, we're using S&P 500 companies. I'm not scanning through, over-the-counter stocks, small caps, really, really micro cap companies that have variations, a lot of variations. Of course, nothing's guaranteed, but we're looking at a history of performance here. Okay, let's add that one in right now. Last but not least, we got to go right back to our company performance, and we're going to scoot on down here to revenue growth. Now, there are some cool things we could take a look at here too, if we wanted to. Okay, we could say, hey, what do the analysts think about estimated revenue growth, estimated earnings growth? But folks, it is just that, is estimated. Now, it still could be very interesting to put up on a chart. We can easily add a column just with a couple of clicks. We can see what the analysts say. But what I wanted to do was take a look at fundamentals with technicals today based on actual growth in the past. So there's our 3-year right there, history growth. We can look at a 5-year too. Some will look at 3. Some will look at 5. I'm looking at 3, but I'm going to use the same number here. I'm not going to choose these ranges. I think these could be okay to use, but I think there's just a lot more that can be gained if we go ahead and enter specific values and then say greater than or equal to, there it is, 15. So notice what I'm saying here. I'm saying, hey, at least keep the internals growing at 12 or higher, but I want sales to be a driver for the future, and I want a historical earnings growth to be roughly on that same line. Folks, that is growth on growth on growth. At this point in time, as you can see over here, we're down to 31. We started at 503. That is about, It's about a 6% number. So about 6% of the companies in the S&P 500 meet this criteria. But it's kind of elite, right? We're putting more of an emphasis on growth first. And secondly, the last thing we're going to be looking at is some of the valuation ratios, because is that growth at a reasonable price as well? You can do it's you're going to be a lot better situated if you don't buy growth at a really high price. And right now, we haven't said anything about that. So that could be a very, very important component. There's some pretty cool technical tools we can use over here too on Schwab that we can look at as well. But there you go. All right, now before I dive into more details on this, I want to go ahead and just show you guys, because historical numbers for, let's say, for example, ROE could be of interest to kind of take a look at. I'm just going to throw Boeing out here just as an example. But if you come over here and look at this with me, I'm going to go ahead and go into the Analyze tab, because we can actually see a history of down below, looking at some of the fundamentals. And you can see, look at this. This is fascinating too. Although this is getting worked on right now and hopefully updated, because on a calendar basis, I think we should be updated already on many of these. But there is, look at this. There's a track record right there of return on equity. What was our number? Boom. We want to see 12 plus, right? How have they been doing to just retain that? Now you can see over here, beautiful, way high, incredibly high. It is above there, at 13, and this is like really super high over here as well for Boeing. Now, I chose this company because it is cyclical, and there are some variations. But one of the things that a lot of traders will really appreciate, investors, is some consistency. Now, this is fairly consistent here. We dipped here, and then we shot up massive over here. All in all, it's still a positive. For consistency, it's pretty decent, but it's not like fantastic or anything. This dipped, this was cut more than in half as we dipped down below. But this is just a great way just to check out what that profitability is. Folks, it's right on the top too. Look at that. Really easy to find. You have an ROA in there as well. But we're looking at what a company really owns there. Oh, there you go. So just a cool characteristic that I did want to point out there for you. Okay, so let's get back to our other screen over here. Take a look at it. I'm going to pull this up and just see what we've got thus far. It is the S&P 500, so there's going to be some recognizable names in here as you guys go through this, and you're going to see them, trust me. So let's go through and see what we've got. All right, Broadcom's in there in this list. We've got Dexcom. I'm looking at a few of the technology companies right now. GE Aerospace, Goldman Sachs. You've got Lilly in there, Lulu and others. Newmont's really been on a tear because it's gold mining. Gold's been incredibly strong. You've got Wells Fargo. You got quite a few in here to take a look at, but yeah, definitely some recognizable names as we go through this list. But now, just keeping in mind what we talked about in terms of the return on equity. Let's look at those numbers right there. I'm just going to highlight some of these. We don't have time to go through every one of them, but just take a look at that right there. 31%, clearly above our 12. All right, GE Aerospace right here, 43%. Think about how they're doing with their revenue, their earnings that they own. What kind of return are they getting on that net income based on what they own already? Okay, because that generates earnings. It's not just revenue; it's what they have already. Those businesses, those structures, those business structures set in place that are creating earnings. That's what we're getting over here. All right, we've got revenue growth. We can compare that. Okay. Wow, so that's Deckers, but you can take a look over here. 21, 24, outstanding job with what they own over there. That's Broadcom. All right, yeah, that was the company that was substituted out for Tesla. Somebody for the Mag 7, I saw them do that. That was funny. So what about Lululemon as well? I do want to take a look at NEM. There's this Now service, and by the way, yeah, a few of these they do look familiar. I mean, NVIDIA as well. Interesting. Okay. So let's look at those. I'm just going to highlight 41%, 107. Again, check the track record because you have the ability to do so. The history of these on the Thinkorswim platform too, as you go through and look at them. But let's hit a few of these names right now on the charts and see what we've got. Just before we get going, we'll move back over to our daily. All right. So AVGO, where are we at on AVGO? What does the history look like? Return on equity over a period of time. Park that in the back of your mind. It met our sales criteria. It met our earnings growth history as well. Now, we've pulled back on this stock, but it's had a good, strong history. Been in a sideways channel actually since, you'd have to say, September of last year. Obviously, a key level of support right there. We did, I would say, support. We broke below it a day or two. A lot of times traders will say, hey, give me a day or two below. Can we make it back up above there? Over that time frame, we did. Can we hold it now? Can we start to then generate higher highs and higher lows? Oh, just an earnings sneaking in over to the far right over here. Really good performance on money flow. Money flow has stayed remarkably strong, even as prices have dipped down to here. Remember, this is something that traders will use for potential accumulation of buyers here, buying potentially. All right. So interesting what you've got over here on this one. But yeah, trying to tie in technicals with what's going on behind the scenes with this company. That is Broadcom. Let's hit a few others here. We could dive in. I do want to do a paper trade or two on these though. But then there's NEM. Yeah, these miners have been crazy strong. But remember, ROE. What's going into a search like this? We're finding strength. So maybe, many of these companies, they have been going up, and you can see these numbers have been strong. I mean, I'm familiar with NEM and many of the other miners, but can you see all the multitude of mini flag patterns in here as well? Talk about these quite frequently in my swing trading class, but finding a company that has that internal earning strength combined with sales and earnings itself, just earnings that are coming from those sales on a performance basis on the income statement, can set the stage for many of these sorts of trades if that's what you're into, the longer term performers or even some swing trades. Now, that's not going to be every one, but at least what we're doing is we're finding the right kind of ingredients for the company operating behind the scenes. Does it fit that criteria? Now, if you come over here and look at this one's a little bit different, but you can watch these two for potential reversals. Here is Lululemon. This has had the performance, I have to say, over a long period of time here, sideways and down. Does it have the technicals? No. One thing about retail, this is a retail company, and we did not isolate this search on industry specifically. Retail, I've got to say, it can be as cyclical as anything else. It's very, very cyclical. Does something go out of style? What's going on? Evidently, something else is going on besides what we're seeing here on the chart. But I want to just say, we're combining technicals here and we're confirming it. There's definitely something else going on here. And what I could say too is this might have been extraordinarily high, and we might have had incredible return on equity, and now it's come back down. This kind of comes back to that Boeing, which is also very cyclical. Okay, some of these companies can be cyclical, and what you wanted to note is just the steady performance of ROE. If it gets too crazy and expectations move up too much, that can be a problem, right? Or if sales, I think sales went incredibly high over here, and now they're just barely probably meeting our criteria. But historically, if you go back, I mean, they were probably, over 100% a year. Sometimes these companies will be over 200% a year. So share prices will go up, but when they come back down to normal criteria or normal levels, you'll get that. Do you see right there why it's so important to keep an eye on technicals? Because this tells us, was it overly, maybe the fundamentals were way strong over here, but over here it's just meeting our criteria. Doesn't mean it can't bounce from here, but yeah. This is what we're dealing with. Technicals can help us visually see that, and quick too. What else did we have? Okay, so jumping back over here, definitely want to take a look at NVIDIA. NVIDIA's been sideways actually since, I want to say October of last year, or August actually, NVDA. Let's go back to our daily chart. I did put a trade on this in our paper money, our swing trade. It was a paper money trade, but it was in our swing trade class yesterday. We've been sideways on this guy, literally, yeah, it was August. It was actually August. We've been flattening out. And we're just barely starting to get moving, maybe a higher low here. You can see, oh, I'm sorry, we'll put this in here. We'll put the flag pattern. I'll show it to you right there. There's the flag pattern right there, possibly coming up to unfold. I highlighted yesterday in the swing trade class that we've got actually a mini flag within the larger term flag, and we trade a lot of those in that class because it's kind of like this. You pull up, you come down, and then there's the possible follow through. We have our targets. This was actually a different trade altogether that we put on here, but here's another example. How has it been doing with his return on equity? Yeah, it's been doing pretty well. It's been fairly consistent with its sales numbers and earnings numbers. Now, if those earnings numbers were to drop off and just go down to our minimum criteria levels, our categories, folks, boom, this stock could fall dramatically. So you got to be mindful of that. Yeah, defective yoga pants. I'll tell you what, Eric, that would do it. You know, you don't want your pants to be defective doing yoga. I mean, honestly, who does? Is that what's going on? It could be. But, you know, that might push your return on equity numbers down a little bit. Effective yoga pants. I mean, pants are a big deal when it comes to Lulu. They do happen to sell a few of those. All right, you guys, we narrowed this list down a lot. This is designed to help you find that extended growth for a period of time within the company. Dive into it, take a look at it, because sometimes within these companies, we do tend to get a lot of, well, sometimes flag patterns that can occur over periods of time. That might mean something. I mean, that could be something that meets, you know, what you're looking for in terms of trading. Some traders just kind of like to reduce the volume, or reduce the volume a little bit, tone down the volume on the shorter term trading and just stick with the longer term trades. Because could that work on these kinds of companies? You guys tell me. Could that work? I think the chart says it all. I mean, it can work, yeah. Sticking with companies that have that performance, that you can see that growth. And by the way, companies that we understand as well. Critical point, companies that we do understand. Back on that AVGO, if we look at this right now. Okay, so back on AVGO, I did want to take a look. That list is there for you guys, though. We build it, so you can go back and look and see what kind of scenarios and setups are there. But there's two right off the cuff that have come back down after a consolidation that may be restarting the trend. NVIDIA, we've got also Broadcom that could be there as well. One of the key notes on this is, you know, can we get another bounce or a higher low? One of the things that some traders might do on this too is they might look at, well, here's the thing. I would let this actually, I mean, a trader, I just say a technician, a number of technicians might look at this and say, I'm going to wait for a bounce off this level. I'm going to wait for a higher high and a higher low, at least on a short-term basis, before I get too interested. There might be other investing strategies that a trader could use on something like this as well. I mean, would that happen? That's the question. The other big one too, that would be like, hey, can you break a new high? If I make a high here, can I start to break up here? The next big one though, to really get this going, is right above that level here, right? So that could be a very interesting area on a company like this, you know, for the possibility of prices going up higher. So these longer term moves on these kinds of companies, folks, I might just go like this, right click, place an alert, create an alert on this. I'm just going to say higher question mark, and then type in, and then just send in create right there. Okay. So by the way, a quick note on those alerts, just so you guys know, this is really an interesting alert because it's on a company that's had that historical performance and it's been going sideways for a while. And this would be a very interesting resistance level to potentially take out. So when you're putting these on, if I right click again, just make sure that you've got down below. Notice I have mobile set up down here. Folks, if you don't have mobile set up, don't expect to get a mobile message. I used to think I'd get a mobile message even if I didn't have mobile down here. I never got a mobile message, you guys. I never did. So, yeah, set that up. And of course, you can set that up under setup up top, application settings, and then just under notifications right there. Okay, a quick note though. I just wanted to highlight because they did want us to bring up just a quick note on alerts. Alerts aren't guaranteed to be delivered or delivered at a specific speed or time frame, and they should be not used as a replacement for actively being aware of your positions. Okay, so yeah, there you go. But yeah, I do utilize those quite a bit. I find them quite helpful for me. There you go. So instead of placing a trade, we're going to go ahead and put this on here. That could be very, very interesting, but that would be, honestly, technically an intermediate high point to kind of take a look at. Now, for you guys over here too, NVIDIA, I've already got a paper trade on. You can take a look at that trade if you want to in the swing trade class, but what I would say is, gosh, we're right at resistance right there. And this is known as a T1 level of resistance, or it's actually where some traders will get out at a T1 on the flag as it comes back up to the prior high. This would be up, higher is like a T2. But what I'm going to do is you might have read my mind on this one. I'm going to go over here and I'm just going to say, you know what? If you take out that high right there, let me know. And I'm going to just notify this above high. And then something like this. I put notes in so I know what the heck I'm looking at. Check stock. Like that. For that alert. Okay? So that can be helpful for you guys to look at, perhaps, as you go through here and take a look at it. But yeah, take a look at this list, go through it, and take a look at some of these numbers. GE is another one that had been actually quite strong, too. We looked at that, but GE, aerospace, more kind of a consolidation. I would say maybe a big round number at 300 on GE over here. It did have earnings. It dipped on earnings, too. Beat earnings, but maybe the projections weren't totally in line. The one thing after earnings, let me highlight this real quick. When you've got a big earnings day, oftentimes followed by a big volume, go over here. Folks, you guys tell me, if I start to take out that high that was earnings, which also was an interesting prior resistance level, it was support too for a bit. But if I start to take out the high of the earnings day, what does this tell me? Kind of about the possible trajectory of that stock. What is the market sentiment looking like if I start taking out highs right there? Could be an area to keep an eye on, right? Possibly. Because on a company like this, still, this is clearly a higher high over here. This is clearly a higher low as it stands right now. The trend, therefore, is still, the intermediate term trend is still up. If you start to take out this level, that's the high above earnings that we dipped on. We could begin to trend up higher. Folks, I hope you found this informative and useful. If you got something out of this, today we looked at eternal growth, making sure that what the company owns, how is that generating earnings? Could sales also play a factor? The return on those sales, I should say return on earnings, but those sales, could they also lift the future growth and enhance that ROE going forward? We talked about that, folks. We built a search in Schwab.com. If you found this informative, useful, smash that like button. Encourage you also to follow us on X, Connie Hill CS, Mike Fairbourn CS. We do post a lot of content. I know Connie posts a lot of technicals. I do too, as well as we post financially related content. Folks, it was good to be with you. You'll see JB next week, but thanks so much for the comments, feedback in the chat. Thank you, Connie, for your help. Everybody have a fantastic rest of the day. See you next time.